Hello, everybody. Kirk Spano. We are hunting income options today. Review the retirement income options May expiration update. So it's out there. Go ahead and whip through it. And we are going to use our handy dandy trading view to find stocks that we can sell cash secured puts on, because I think you're going to get a surprise from Uncle Jerome Powell this summer. Let's take a look at this chart so you really understand the backdrop. I know that there's a lot of narratives out there. I have explained over and over that they are wrong in the most cases, but take a look at this chart. This is the growth of the M2 money supply over a very long period of time. What do you notice about that? Pretty uniform chart, isn't it? Except COVID, when they really blasted M2 money supply up. But then for the last 2 years, they've been engaging in quantitative tightening, right? This is quantitative easing and quantitative tightening. And this was massive, 3x in a year and a half compared to what they did over 15 years. So this, from here to here, did have quantitative easing, but then we really got easy. And that came with fiscal stimulus as well. Not only the COVID bailouts by Trump, but then the Reconciliation Act, the infrastructure bill, the clean energy bill, and the semiconductor bill under Biden. So we are, in fact, building back better. It'll take a long time to build it all, but it's a generation's worth of work at least. And so we got inflation, and your Ludwig von Mises crowd, your Austrian economists, want to blame it on this. But the reality is that the fiscal stimulus was roughly similar. So it wasn't just monetary, it was also fiscal, to the point where now you are hearing the term fiscal dominance. Monetary policy is bringing the M2 money supply back to the historical curve, almost there. You are seeing quantitative tightening wind down as of this month, so that we should have somewhat of a glide path over the next year or two to bring these lines back into historical alignment. Now, I believe that what will end up happening is you will see this area here where the quantitative easing put us above trend. I believe that'll happen again as the baby boomer retirement crisis kicks in. So up here, we'll get above trend again. Between now and then, we have stocks to buy and ETFs to own and asset allocation to do. So if we use our handy dandy trading view, use our weekly technicals, go ahead and copy these, just change everything to 1 week. And we can start with the S&P 500. Take a look at all the stocks that are oversold. In fact, let's start with the stocks that are overbought. And you can see the top of the list: First Solar, NVIDIA, Walmart, NextEra Energy, Costco, Deckers. Great companies, but should they be trading where they're trading right now? In a lot of cases, I would argue that they are anywhere from a couple of years to 5 years and maybe even 10 years ahead of themselves, because momentum begets momentum. And until that breaks, you can ride it up. The problem is that when it breaks, you get huge drops, and we've seen 10 and 15 and 20% drops in 1 day on stocks this year. People believe, well, there you go, it's all out, and then it goes up for a couple days, a couple percent, and then it has another big drop. When some of these big drops come, you are going to feel it. So I really think that all these stocks near the top of this list you should be trimming, including First Solar. Take a look at the chart of First Solar, and I don't know who owns it. I don't. This spike here, right, that kind of chart never makes sense, does it? So even though they are profitable and net debt free, you really have to ask yourself the question: is this really where it belongs today? Elliott Wave says there's a correction coming. So I would probably be selling covered calls up here and trimming, with the idea that I could buy it back and sell cash secured puts down here. And it's a 20 to 30% decline that's being forecast. Go back to things to get into. If you have things that you want to get out of or you wonder about, ask in the comments or in the chat room, and I will respond. Accenture is a company that I really like, so let's find that chart. I had it up here a second ago. There's Accenture. And what I want to do is show you something. Take a look at this chart. Okay? I'll take a look at Adobe. Kind of looks the same, doesn't it? So what you have is a market-driven pattern. it should tell you that these stocks, let's overlay SPY, are pretty efficient. Let's go back to 2018. They've met over this time period. That means the correlation was basically 1. Basically has a beta of 1 over the extended time frame. Even though in any 1 year, I believe the beta is probably higher. The beta is usually measured over 1 year. And so this probably has a beta of 1.1 or 1.2, I would guess. But if you measure it over a long period of time, going back 6 years, Yahoo says 1.21. Oh, see, I eyeballed that pretty good. Now, I like Accenture as a company. I think that they're going to benefit from AI. And I believe that the beneficiaries of AI will be the companies that use it, just like the companies that use the internet got ahead of the companies that did not. Take it down to a micro level. Think about all the companies in your city, restaurants in particular, that did not build a website 10 years ago or even have a Facebook page. How many times did you want to go out to eat, but you want to take a look at the menu beforehand or maybe order to go? And if they didn't have a website, especially during COVID, what happened to them? They went out of business and they blamed COVID. But other companies didn't go out of business during COVID. Restaurants in particular that didn't go out of business had a good website. They were able to do takeout. Why? Because they had invested in having a website and a takeout system that when COVID hit really benefited them. The same thing is going on with AI right now. Companies that are investing in AI, this was a theme at the energy conference, are doing well. And they're going to continue to do well relative to their peers that don't invest in AI. There's a couple of companies that I do the 401k plans for, and I get into discussions about the company because I want to learn about them with the ownership. And I invariably ask them about, they're a manufacturer, I ask them about 3D printing, but I ask them all about AI. How are you incorporating AI? And I get some rockhead replies once in a while. Oh yeah, that doesn't really apply to us. Oh boy, oh boy. It doesn't apply to your sales and marketing. It doesn't apply to your inventory, really. So, or your ordering, your supply chain. Tomorrow's winners aren't going to be the companies that are building AI. It's going to become the companies that use AI well. Just like the hype of the internet in the 90s was, hey, we're building internet stuff, we're going to make a fortune. And what it turned out is that the companies that just use the internet well, Amazon, Google, Facebook, Microsoft, they used the internet well, created cloud-based businesses, things that ran on the cloud, brought people to them through the internet, made a ton of money. And the next wave of huge winners are going to be companies that use AI well over the next 10 years as they crush their competitors who don't invest in the AI or using AI-based systems. Accenture is a company that I think can benefit a lot from AI. So this is a company that I keep on my list. Now, these alligator jaws just closed, but notice there's usually a gap. So what is this indicative of? What does this mean? This is probably an opportunity to look to get involved with Accenture, which should do well in the AI age because it uses AI well, helps other companies use AI. By the way, they're involved with Ethereum-based blockchain solutions, happen to own Bloomberg, which is data aggregation. So I really like Accenture here. Now, do I want to sell puts on it, or do I want to just look for a spot to buy the stock? The September puts again, they have September puts, but I think I like to look at August, the dog days of summer, and the stock market maybe has a lull. There you go. I think I showed the wrong chart a second ago. Pull SPY out of there. There you go. Now we have our price. $281 stock. You may not write cash secured puts on it. So our job is probably to find the spot where to start nibbling in. So where do we nibble in? Let's shorten this up to 5-year charts, even a 1-year chart. Here's your daily. This is where you start looking for a place to buy. You say, okay, Elliott Wave says that it's basically almost done correct. Fair value gap lines, these orange lines and this yellow zone, that's roughly where institutions will pull it to. So we're looking at a spot here where Accenture is basically bottoming out. And then it's going to get sucked back up here into the 300. I think I'm probably going to nibble on this stock at some point. Somebody points out that they're domiciled in Ireland. Well, technically Microsoft is too, right? It's still an American company. They do that because it's a tax dodge. You ever think that the big boys don't know how to dodge taxes? Think again. Take a look at what they pay taxes on and what they claim their earnings are. Accounting tricks. So I really like Accenture here. if your account is big enough, I think you can sell $270 puts, get a little bit of income. Not bad. A little over 3% for July, August, almost 3 months. Not so bad. Times 4. Low double-digit return. It's okay. I think you're really just looking for a spot to buy Accenture here if you decide they qualify for your top 20 to 30 stock. I think my bottom fishing is about 270. I have to take a look at the VSL. Somebody could do that. What do I have for bottom fishing on Accenture? I do think that Accenture is probably something that right around here I'd consider bottom fishing. Adobe's got a similar chart, but I don't think, and I use Adobe, so I'm pretty familiar with it. Awesome software, but it's specialized, man. I tell you what, unless you really are a graphic designer and you're really using Adobe on almost a daily basis, it is hard software to use, I think. I don't think it's nearly as intuitive as it should be, or maybe it just needs to be that complex, but it's not something that everybody can buy. So I think that this range that Adobe's been in, even with the advent of AI, is probably just going to be the range. Now, if I could get Adobe way down here, I'd probably buy it, but I'm not going. So I think Accenture is one to look at. That's why I had it up. Take a look at some of the other charts. Caesars, I think I started selling puts on it already. I do think that this is one that you should be considering because gambling's not going away, folks. And these guys have become asset light asset lighter as they sold off casinos, right? They rent them back, but they don't have to own them necessarily. Don't have to carry that debt. That's really what they get out of is the debt. Carl Icahn, a week after I said I was starting to buy this, revealed that he's been accumulating a stake again too. Now, the last time that Carl Icahn bought into Caesars was here and in here. He's pretty well informed on this company. So I would be taking a look at, there you go, $30 puts for July, although I think you might want to jump out to August at this point. You can't. So July 30. I'll double check this. So the July 30s, here you get about 45 cents for, so 45 bucks per 100, 45 cents, a point and a half for about 6 weeks. It's not too bad. What do you get for September? $1.20. Yeah, I think you could do either way, either July 19th or the September 20th. Either way, it depends if you want to get, that's a pretty good jump in premium. I'd probably be looking at the September 30s, but also take a starter in this one, I think. I really like the way that Caesars is handling their business right now. And I think that there is definitely some M&A in their future. I think that Caesars is very likely to get more involved at the local level as they've been doing. They're already in New Orleans. That opens up soon. The new renovation there. The New Orleans casino is going to be pretty awesome. It's not too far from the river, but of course they built that giant wall. So I think that they're in good shape. I'd be surprised if Caesars New Orleans doesn't add a lot of money to Caesars' bottom line. Also, Caesars is very U.S. based. I think there's a good chance that they start to expand in Asia, right? They're already in Dubai. So I think that there really just is not a lot of risk left in this stock down at this price. So I really like those put options and taking a starter as well. First Solar, again, probably trim it. You can keep working your way down. Intel, I didn't show this one. So Intel just fell off a cliff, and now it's doing the jitterbug. The fair value gap hasn't even adjusted yet, but it really should get pulled up here to the middle 30s. I think you are plumbing the bottoms on Intel. There's really not a lot of risk left there. We know exactly what their business is going to look like down the road. They're going to do their best to copycat NVIDIA and Taiwan Semiconductor, different parts of the business. So this rally here, which took a while, I think it'll happen again, and this time it'll break out. So I really like selling puts on these guys because it is a long-term process. You don't necessarily have to just keep cramming it in now. So if you take a look at September, and I think that I probably want to go, stock is right at 30 right now. Wow. So I'd be selling the September 30s for sure and take the $2. But I'd be buying the stock too, and I do have a half position in it. And somebody says execution risk with Intel. Yeah, I understand the narrative that people like to throw out there because, oh my gosh, they had a couple things go wrong in the past. Intel's a kick-ass company. And the idea that they're not, and oh, they had a problem once before, so they'll have a problem again. I don't know. I get bored by those arguments. I'm not too worried about execution risk. They're building the great big things. The great big things will work. And you can keep moving down here. Walgreens, who really knows? Do you ever go to a Walgreens and just think to yourself, I really don't like it here? That's kind of what I think every time I go in there. I really don't like it here. Yeah. Somebody says Intel's biggest problems are not favored by traders like Nvidia and AMD. That just means you're buying it out of favor. Why would you want to buy the stuff now that the traders have already bid up? Doesn't make any sense. If you're really trying to chase, do it yourself. Don't even ask me. I'm telling you how to get things dirt cheap for what they're going to be 3, 4, 5 years out. You want to chase? Hey, maybe you'll be the first billionaire that ever chased. That's not how you get rich. That's not how you make millions of dollars. You can think that you're going to be able to outtrade the market. Good luck with that. The computers and the algos and the rich guys that cheat with their hedge funds will kick your ass at some point. It's going to be like this. Come on, come on, come on, come on, boom. That's what they're going to do to you. They do it over and over and over. So, through Walgreens, I think Monster Beverage is done. I was of the age, right? I remember when Monster first came out. Those were my bar years. Those were my post-divorce bar years, right? Yeah. This is Generation X in their just got divorced bar year, right? So all my friends getting divorced in here. Got married in your 20s, got divorced in your 30s, and now you're trying to figure things out here. But I think that Monster is basically done. There's nothing special about it. I think they might finally sell out. We'll see. I don't think there's a big premium here. Take a look at Coke stock and Pepsi stock. They chop around, right? Coke is the better example because they don't have the snack food like Pepsi does. What's the difference? There's no difference. They hug each other. They jump back and forth. These stocks are average now. Add SPY, right? SPY beat them both since 2016. What's the point? Yeah, what's the point? Why own stocks that can't beat the index, right? All investing ultimately is relative investing, and you're generally going to make your money, and you're buying like I like to buy on these slopes here. Then you get those big jumps, and then you get consolidation, and then you get another big jump, and then you got to check to see if you're over or undervalued. Now, people don't like the pharma companies, some of them, unless you got to get rid of your fat drug. They don't like the pharma companies, Pfizer and Bristol Myers in particular, because they've had to work their way through developing new pipelines as certain patents expired. Pfizer hurt by the fact that you can get erection pills now from anywhere for cheap, so they have to invent new stuff. Well, I have told you all along that mRNA platform of theirs, which works with proteins and other things, is incredibly valuable. And now that they have AI, they're going to do really well. Bristol Myers has a great pipeline. AI is going to benefit them. So you can say, well, but they haven't had a new drug in a while that's been a blockbuster. Okay, well, take a look at their chart. Have you not wanted to always buy these big dips? Always. The answer is always. And now with the baby boomers getting to be pill age, there's going to be another big rally. So Bristol Myers is another one that I think you really ought to be looking at building your positions in. Great company, great balance sheet, great technology. Now the benefit of AI is going to hit them in the head pretty hard. So I think you do a $40 put, get a $1.63 to September. Right, that's a low double-digit return just on the put. And you should take a starter because they have a dividend, and you don't want to miss those dividends because they're pretty fat. Now, I'm mainly talking to retirees on some of these dividend stocks. So let's take a look at Russell 2000, which is where you should be mainly if you are a growth investor. If you are a long-term growth investor, if you're basically my age or younger, you should be a growth investor, period. End of story. If you're under 55 and you're not a growth investor, you're doing it wrong. So some of these stocks don't make any sense. Novavax jumped up on that deal. We talked about Novavax a couple of years ago. Probably should have had a position. It took 2 years, 3 years for it to catch up, right? Because their COVID vaccine wasn't one of the ones that everybody used. Now suddenly they jump up on a deal with, was it Eli Lilly? Something like that. So let's take a look at this the other way. what's undervalued. Like, I don't know a lot of these companies, so I'm going to use my blue list. So these are companies that I keep an eye on. I must have been looking at some new companies. Stoneco, I haven't been in that in a while. Not a lot oversold. Let's take SunPower has rallied recently. Rocket, what's going on with Rocket? Boy, that's a heck of a bounce. We talked about this a couple of weeks ago. Kind of nailed that one right on the head. How many of you sold cash secured puts on this one a couple of weeks ago? Sure hope so. You had Rocket Labs put to you on that dip below 4. Yeah, I did too a little bit. Yeah, I tell you what, man. This little drift down is probably people taking their profits. We should really be taking a look at it. Rocket Lab is going to end up being, I think, the main competitor, SpaceX. So if you want to sell puts on $4 puts for July, 17 cents, I guess. 17 cents into $4 is still about 4% for 6 weeks. And there are 8 6-week periods in the year. So 8 times 4%, it's about 32% return, 30 something, right? Just eyeballing it. Again, this is one that you should be looking at owning. This is a stock that can, in my opinion, very easily get back up in here. Oh, look, that's the target. That's the machine target too. I'll tell you something about these machine targets, these machine generated targets. The other machines push towards those machine generated targets. Understand the mechanics of the market, how it works. Don't ask me why it went up today. Don't ask me, after something's up 300%, should I still buy it? Have some foresight. Say, okay, this is a company that's going to compete with SpaceX. SpaceX is humongous. That market's growing. SpaceX is priced as if it's going to get 100% of that market. It's not. SpaceX is priced like it's going to get 200% of that. It's not. So this is going to go from 4 to 14 over the next couple of years, maybe 2-3 years. Maybe it'll happen in a matter of months. That's what happens sometimes. Sometimes it goes straight up. So close some stuff off to make life easy. Let's go back in time here and go to Rockwell. Rockwell has rallied a couple of times, and I've tried to get people to trim it the last 2 times it spiked. I love Rockwell long term. I love that they're a Milwaukee company. However, there's some physical limits to their share price until well into the AI age. Right? They're selling machines and systems. Companies are going to invest money into AI, and one of the sets of systems they're going to buy are going to be from Rockwell. Metis bought a Rockwell energy control system for their microgrid. These guys are going to be huge in the energy transition, but they're going to be volatile. I think this probably breaks down, gets to about 225. It could conceivably get under 200. Around 220-ish, 225-ish, though, I'm going to be pretty interested in looking at. And I'm going to be super interested if it really rings out the risk and creates a big margin of safety by getting under 200. So just keep this one on your radar. And we can keep going through here. See anybody else that jumps out. Planet Labs, Black Sky. I don't know. Not super exciting to me. I don't feel like this is my whole list. AST Space Mobile just rallied, but it's got a lot of room to go. Yeah, wow. How's that? This is an example of sometimes things move fast and why you shouldn't be trying to trade with the traders. You just get ahead of them. When they give you an opportunity, that's when you want to get in there. I talked about ESTS down here, but I get blowback on that. But it's been going down. It's not going up yet. There you go. So now it's going to retrace a little bit. It could get all the way down in here, 6s, 5s even. And if you don't buy it when it retraces, you have nobody to blame but yourself. So I don't think we're ready to sell any cash secured puts on it yet. I can't imagine they're expensive now. Let's take a look at 6. Let's take a look at the 750. So the 750s you can get $1.30 for. That's pretty good. Pretty good. 100 divided by 130 is $1.30. In the 750, so that's 18% for 10 weeks. Multiply that by 5, right? That's a huge premium, right? So you have 750 minus $1.30. You'd be getting it for a price of $6.20 if it gets put to you. I think you can let the stock price come back though a little bit more until it gets closer to 750. When the stock price is close to the strike price, this will be more. This will be 2-ish or something. That's when you sell that one. So keep an eye on AST Space Mobile to get some pullback down into here. I'm not selling any puts on a Metis right now. I'm just buying the stock. You don't want to sell the puts on that one anymore. It's counterproductive at this point. The whole point of a Metis right now is soak up the float and look for one of these moves, because this is what's coming. And I don't know when it's coming again, but we saw it last year, right? We saw it last year. It's going to happen again. I don't know where it happens, but it's going to happen again. And we are 4 weeks from Russell 2000 inclusion. That could be a catalyst. So I would say all you want to do for the next month is buy Meta shares and get to whatever you think your maximum asset allocation is on that. All right, I'm going to have to edit this up, but I will get a retirement income options out with about the 5 stocks that I'm selling puts on this week and what I'm keeping an eye on going forward. I do like AST Space Mobile. I think I might want to own more of that. The launch is in, I think they moved the satellites to the launch facility in August, and then they're looking for a window. I thought it was September, but I could be wrong. But that contract with Verizon, right? If people wanted to think that, oh, well, AT&T, they don't really know what they're doing, and then Verizon jumps in, and by the way, Rakuten and American Tower, folks, AST Space Mobile is real. You want to make sure that you own it because the upside is just off the chart. Off the charts. It can be a 30, 40, $50 billion company. It can be an S&P 500 company. That's how big AST Space Mobile is probably going to get. Rocket Labs might carry some of their future satellites into orbit. The space economy is very AI based. It has to be. You've watched Star Trek. It has to be. The Sphere, very AI based. All these companies that benefit from AI, that is your next mania. So get in there now. All right. Any questions about anything specific that you own? Does anybody own anything that you think is overbought or overvalued? You're having a hard time trimming it. Because I hear from people all the time, I know when to buy, I don't know when to sell. And it's kind of half truth there. A lot of times people don't know when to buy either. DNA, yeah, I've been getting rid of it. I just don't want to wait anymore. But I have so little in it, there's not much point in doing much with it either. So, I've been talking about not having a lot of confidence in DNA in the short run for a long time, for 4, 5, 6 months. I think the company survives. I think it's a real business. I just think that management probably grabbed for something too big too fast, and now they gotta muddle through for years and years and years. Yeah, DNA is cheap. I wouldn't be buying it, but I'm not buying it for anybody new, and I've taken some tax breaks and I'm shuffling it around, but I have made a commitment here in the last several months. I feel like I've gotten so good at this that there's no point in me being stubborn and hanging on to losers. That's why I got rid of Warner Brothers, Zuck and Zasloff, and Sherry Redstone's not going to do the deal that she should do. I have no idea why Apple and Google aren't buying Paramount or Amazon. I don't get it. Maybe these companies are a big deal after they get sold, and I'll be looking for them when they're finally looking to get bought, to get rid of this shitty, just parasitic management that they have, then I think they'll be worthwhile. Well, here's the thing with the Paramount Skydance deal. It's the wrong type of deal to begin with, right? It's just going from one daddy's money owner to another daddy's money owner, right? Sherry Redstone didn't make anything in her fucking life. She just got the company from her dad. And Junior Ellison is better than her probably, but it's still Daddy Warbucks Ellison's money from Oracle. Paramount belongs with a big tech company. So does Warner, unless Comcast wants to get in there. These are companies with great assets that financial people and idiot children have completely screwed up. And that is a big lesson, right? That's a lesson, is don't fall in love with the idea if the management sucks, because as Warren Buffett has told us, you better have a company that an idiot can run, because eventually one will. So I'm not wrong about the asset values that Paramount and Warner have, right? I'm not wrong about those businesses. Management has screwed it up so bad that the value of those businesses are dormant right now. At some point, the value of those businesses are no longer dormant, but I don't know when that's going to be, right? So, oh well. And as far as DNA goes, because you're talking about it in chat, they should have always been focusing on making more money, but it was sensible to collect a ton of data, which they have now. So the pivot, much like here on therapeutics, is okay, let's focus on the stuff that we can be profitable in now and the other parts of the business will develop over time. Well, that's what Heron Therapeutics is doing, and their stock went up. So I'm not ready to say screw it on DNA. I mean, clearly I was years early on it, but this is the difference. Is other people will say I'm selling DNA and I'm never going back because they screwed me. Stop being personal. There's probably an opportunity in DNA at some point. Try to identify 6 months to a year ahead of the market identifying when that opportunity is going to catalyze. I don't know what it is. It's not an easy one to figure out. Right? It's not an easy one to figure out. And honestly, somebody says they need to sign more contracts with big pharma. I don't know. Maybe just one of the big pharma companies just has to come in and offer $3 a share and then be done with it. Right? I don't know what the price tag is to blow up any of the poison pills or anything. But the company is so cheap right now that if that platform is worth what I think it's worth, but the market doesn't value the platform and it's, oh, they're not profitable, so we're not gonna bid that one up. We're gonna bet on GameStop instead because they're not profitable either. But theaters are cool. Right? The market does stupid shit nonstop. And these little traders in their little fucking Discord rooms who talk their goddamn trade just understand what they are, right? They're little, inexperienced guys with $30,000 accounts who think it's a big deal to make $3,000 that they can go out and drink with, right? I mean, how screwed up are those younger traders that they smoke weed instead of doing cocaine? Cocaine is a much better drug. I mean, come on now. So let's get realistic about who we're dealing with in the market. It is what it is. And they're all going to miss the boomer retirement crisis because they don't even understand what the hell that is. We've been talking about it for 10 years. We know it's coming at the end of this decade, give or take. We know it. Definitively know. Gundlach. Now, let's go over to the YouTube page. You scroll down on here, you'll see what else I'm watching. Like some of this stuff is funny, so I throw it in there. Or this Bohemian Rhapsody video is off the charts good. These two Jeffrey Gundlach interviews from the last month or so. Watch them. Listen to what he says. And you tell me that he's not repeating half of the stuff that I've told you over the last couple of years. The M2 chart that I had up earlier. He talks about exactly what I've talked about. How we got ahead of ourselves because we created bailouts for COVID because we weren't sure what COVID was going to be. And then we use that crisis to create the funding for semiconductors and alternative energy and infrastructure, a smart grid, because why let a crisis go to waste? Fix a bunch of stuff because nobody cares about the politics when you're fixing a big problem, right? Oh, it's a crisis. Nobody asks for the details during a crisis. Just deal them out. Money. Anyway, I will get these up this afternoon. I'm going to write it while this is processing, and then I clearly have to edit the heck out of it. All right, I'll see you Saturday. While I'm in Vegas, I may or may not do any videos at all. If I do, I'll probably do them on my own time and then just release them. So don't count on live programming the second half of June. All right, take care.